Hi, thanks for tuning in today. This is the ASX and Sectors weekly chart analysis for the week ending 6th of January 2023. Welcome to 2023. First chart is the S&P ASX 200 index, the XJO, and volumes increased to a reasonable amount this week, which was nice to see. Perhaps more than in recent years. This was often a very low volume week. And as you saw last week, volume was very low. It was a shorter week, as was this week. Now, overhead, you've got the current resistance line, and this is probably the breakout line up here, where the market would break into clear air if exceeded. Now, the market has been reluctantly moving lower. It hasn't really been stretching lower at all. You can see there was a bit of buying support on this bar. That's this volume here. And last week was a down bar on very low volume and closed back just within the range of the previous bar. It was fairly insignificant. And while this week was still below average in volume, the volume was above the 50% level, so a little bit more significant than last week. And the price action was perhaps a bit more significant for sure. You can see the market did dip below the previous two bars low, but it rejected going lower. It recovered and pushed higher. This is generally a good sign. It's a sign of underlying positive sentiment in the market. And it was perhaps what was expected, but it was good to see that it actually was achieved. And the market closed up level with the close of this bar where the buying support came in previously. So that was a good recovery. You might find there is some testing for supply early next week, something like this, prior to any other movement. If there was a test for supply like that and increased supply came in, you may see price move a little deeper and challenge the sellers. If there's a test for supply like that early in the week and there's very few sellers in the market and trading conditions remain favourable, you may see an attempt to push higher. And this is the level up here where I expect resistance to come in above. The mid-caps. The mid-caps have been trading very similar to the parent index, the XJO, which we just looked at. They've been moving reluctantly lower. Some buying support appeared to come in on this bar, although it was on below average volume. Last week saw very low volumes, very narrow spread, although the spread really does go up to here to make it more clear. That bar looks more like that, if you can picture it better. But it did remain mostly within the range of the previous bar. And similar to the XJO, the market did dip below the previous lows and it did recover and it moved back up to the close of where buying support came in 2 weeks ago. So that was a good recovery. It's perhaps a little less significant in this market. The volume was below 50%. So because it did the same thing as the parent index, we'll say it was still significant, but it's perhaps a little less significant than the parent index was. Next chart is the small ordinaries sector. And this was slightly different than the previous two charts. You can see price moved up and broke out here after a short period of consolidation. And price is effectively testing the breakout for strength here. Now, 2 weeks back, buying support came into the previous two markets. Volume was above average here, and it suggests a strong attempt to support the market. This was buying support come in. Now, last week was the Christmas week, the shortened week, but volume was actually pretty high in this market, considering the other two markets saw volumes right down here, and this market was almost average. So buying support has come in at the old breakout line, and in response this week, prices recovered, albeit on reduced volume. So this was actually a fairly strong move, a much stronger move than the previous two charts, and maybe showing some intent we'll just have to wait and see. I expect there'll be some resistance at that level. There's higher levels that really will need to be looked at later if the market continues higher. But this was maybe a more significant push higher than the other two markets suggest. This is the financial sector, and the financial sector wasn't reluctantly moving lower like the previous charts, where price continued lower on those charts. This market was consolidating sideways, was very low volume in Christmas week, 2 weeks ago, a less than significant bar. Price dipped below the previous lows as it did on the other charts and recovered nicely, and it's closed just below the previous bar's close. Now, here's probably where resistance is going to be found above. So you may find a test for supply in response early next week, and then a response depending on how much supply is drawn out. Here's the breakout level right up here. We'll look at that later if it's challenged in the future. This is the miners, the metals and mining subsector, and this is the first of the markets which look a little bit more promising at the moment. There was a period of accumulation through here, which I've spoken about a few times previously. There was a gap out of this area, an acceleration higher, always a nice sign to see. It accelerated past this level, and it's currently dealing with this level here. It's a little zone of resistance, and it looks like it's perhaps even finished with it. It's moved up, it pushed out the other side, it came back and tested it for supply and accelerated back through. And this leaves the market really well poised to push higher. Now, as I always say, and it happens a lot in the market, you may find an early test for supply, something like this, and then the market will move depending on how much supply has been drawn out and if trading conditions remain favourable. So if supply is drawn out on a bar like that, then you may find price moves a little deeper to challenge the sellers. And if there is very little supply in the market and trading conditions remain favourable, this market is poised to move higher. This is the gold sector, and it has accumulation in the background, similar to the miners, as I guess it would do. It also gapped out really seriously and above this little pivot here. So that was a strong move initially. Now, this period here looks a lot like bullish absorption. If you want to know more about that, I've got a video on it. But there was a pressing nature to the upside. There was some clustering of closes at similar levels. And you've got threatening down bars that had no downside follow through. And it would appear that the market has broken out from this period of bullish absorption this week. Now, similar to the miners, you may get an early test for supply, and then the market will move depending on how much supply has been drawn out. There's a lot of supply drawn out. You see price probably come back and challenge the sellers. And if there's very little supply drawn out and trading conditions remain favourable, I would expect this market to accelerate higher, or at least push higher with some vigour. Here's the zone to the left where you would expect some supply, and price is right at the highs of that level now. That's where a breakout above this level would probably be significant. This is the energy sector, which has been a very awkward sector recently. There's been very little harmony amongst the stocks that comprise this sector. There was a period here where I thought the market was going to absorb its way out and perhaps head higher. But some stocks are moving in one direction and some stocks are moving in the other direction, and you're getting all these overlapping bars. It's very awkward and messy. Price pulled back. You can see this week it's a very awkward looking bar, but the market's likely moved higher from the previous close. Then it's moved lower and it's made the lows below this more significant low, and then it's recovered back to close just back above it. So that was perhaps the most significant part of this bar, the recovery back above the lows of this bar here. Volume was only about 50%, which may explain to some extent the wide spread. Markets can be moved around to a large extent on low volumes. It doesn't take much to move them. If there's a lot of sellers in the market and very few buyers, the market has to stretch lower in order to find enough buyers to satisfy the sellers. So it's not unusual to see wide spreads in low volume environments. But the recovery off the lows this week was worth noting, and we'll just see how it responds next week when the market opens again. The healthcare sector moved lower again this week, which was a little surprise. It appeared on this bar like buying support had come into the market, and I expected that the market would trade sideways or up in response, but it's moved lower and it's closed below the previous bar's low on pretty good volume for a shortened week. In fact, both weeks. The other markets were down here on this bar and perhaps around here on this bar. And this market has pretty good volumes and it's continued lower. It's not really moving lower reluctantly like the other market. It's actually beginning to stretch a little bit lower. Now, there should be some support down here of some description. Just how strong, I'm not sure. This market's looked like it was going to break out a few times in the past. It's failed each time, which has been quite a disappointment, really. This market looks more like it's going to test these lows for strength than it is going to respond higher. If it does respond higher, we'll have to change the thesis somewhat and say that this was indeed buying support. And if you have a reversal, maybe like this, then these three bars together would actually be significant. But at the moment, we don't know that's going to happen, and volumes have been increased as prices move lower, and price moved below and closed below the low of the previous bar where it appeared buying support came in. So we'll just wait and see what the response is there and see if the market moves down and tests the recent lows for strength or if there is a reversal. It's questionable. Last chart is the industrials, and they've had a series of opportunities to break out previously, and each and every time the market has failed dismally. The market's moved back to this level the last two times. Now, 2 weeks ago, price stretched lower in order to find enough buyers to satisfy the sellers on very low volume. So the spread on that can be taken with a pinch of salt, but the volumes was very low again this week. And although price did dip below the previous bar's low and recover, it's perhaps not that significant on very low volume like that. So volume should be back to a more normal degree next week in all the markets. So we'll get a better view on what the actual overall market sentiments are. At this point, it's a minor recovery, and I'm not putting too much credence on it just yet. I'd prefer just to wait and see what happens in this area next week in response. Just quickly back to the parent index, and this was a much stronger recovery back above these lows. When markets do dip below lows like that and then recover, it usually is significant. If this was higher volume, I'd really call it as being worth noting. I'm a little unsure just how significant it'll prove to be, but I'm thinking that it was at least worth being aware of at the moment, and we'll see what the response is next week. More than likely, there'll be an early test for supply and then a response to that, depending on how much supply is drawn out. Okay, that's a lot for the week. Hopefully that was worth your while watching. Thank you. See ya.